Have you ever wondered how options trading works? The world of finance is full of intriguing methods for making money, and options trading is one of those strategies that might have piqued your interest. Imagine buying a stock. It's straightforward, isn't it? You're purchasing a tiny piece of a company. Your profit comes from the stock's price increasing, and you can hold onto the stock for as long as you want. Options trading, however, operates on a slightly different principle. Options trading involves contracts. These contracts give you the right, but not the obligation, to buy or sell a stock at a predetermined price known as the strike price, within a certain time frame. This time frame extends until what we call the expiration date. There are two main characters in this story of options: call options and put options. Call options are like optimistic friends. They give you the right to buy a stock at a certain price by a certain date. You might cozy up to a call option if you believe the stock's price will rise. If the stock price does indeed ascend above the strike price before the expiration date, you can exercise your option to buy the stock at the lower strike price and then sell it at the higher market price, making a profit. On the other hand, put options are like protective shields. They give you the right to sell a stock at a certain price by a certain date. You might choose a put option if you believe the stock's price will fall. If the stock price takes a tumble below the strike price before the expiration date, you can exercise your option to sell the stock at the higher strike price, even though the market price is lower, thus making a profit. As we wrap up this conversation about options trading, let's summarize some key points. Options have expiration dates. If you forget about them, they'll become worthless. Options contracts are social butterflies. They're traded on exchanges just like stocks. Their prices fluctuate based on supply and demand, as well as changes in the price of the stock they're linked to. Options can be used for speculation, hedging, or generating income through strategies like selling covered calls. Options trading can be more complex and risky than trading stocks. It's like a tricky dance. You need to learn the steps and practice before you can perform. So, do your research and understand the mechanics before stepping onto the trading floor. And remember, starting with small investments until you become more comfortable with the process is always a wise move. So there you have it, the world of options trading demystified. It's a fascinating world that opens doors to new ways of making money. But as always, remember to tread carefully and make informed decisions. Happy trading!